Hello, my name is Victor Adair, and I'm here on behalf of HowStreet.com. We're in Vancouver. It's the second week of June 2009. My guest right now, David Coffin, HRAadvisory.com. I've been reading the letters that David and his brother Eric write for some time now. Their specialty is looking at mining stocks and recommend which ones to buy, which ones maybe not to buy. But you don't just look at that. You look at the big picture. Let's go to that. We had obviously a tremendous crash in junior mining stocks and that sort of thing from the summer of last year. We've had a bounce back in some of the stocks. Why have we had the bounce back? Is it because we've made a bottom and the green shoots are real, or what do you think?
We've possibly made a bottom. We may retrace that bottom on the broader markets. When a market has a major crash, such as the one it had last fall, there's going to be a reactive bounce. You just have to look for that. Traders look for that, they trade it. The question you're asking now, of course, is whether that continues. Our take is that certainly on the broader markets, consolidation. Now, in areas where we focus, copper in particular, we were comfortable telling people to come back into the copper space right after the crash last year. We're now telling them to look for consolidation. The copper price has had very strong recovery. The fundamentals in terms of buying out of China have looked very good this year. This is typically a slower period for base metal purchases at any rate, so you might as well be doing it on a normal seasonal basis. And at the same time, this is the check that we feel is needed in order to be comfortable that the large buying out of China is more than just warehousing, and as importantly, that the warehouses in the West that have been getting emptied by it are in fact as empty as they appear to be from public numbers. If there's more copper to be sold in the West, the price consolidation will be that much deeper before it's finished. So it's time to look at that, wait and see, shave your costs, take some money off the table in the base metal space, probably in the broader market as well, although we don't focus on that as an area of comment. But at the same time, we're saying redeploy more into the gold space again.
Now, you look at mining companies, but particularly maybe the more speculative ones rather than the big established ones, that sort of thing. They're the ones that really got clobbered last year. How much have they come back relative to how much they got clobbered?
Well, they've come back to varying degrees. It's a lot of it's company specific. With a smaller company, a pre-cash flow company, it needs to be active. In order to have been active, it needed to have cash in the bank. So the ones that were getting down to low dollars really haven't recovered much at all yet. Until that funding shows up, there's no basis for them to enhance their assets. That's what the whole process that they're in. But for others that have had the cash in the bank, and more recently in particular, those that have been able to put out strong results, they're seeing that come into the market. For ones that had been trading at high prices in the past, they're still making their way back up, so we think there's still lots of opportunity to come and see those. There's been a few news stories that have put out highly successful results. They're trading at highs, but that's in part because of their structure within the market. They were clean. The market could react to them, and now, since some of them have been up for several months, the market obviously is reacting to them, at least in the gold space.
I'm talking with David Coffin, HRAadvisory.com. You were saying earlier that we've had a good run up in the copper stocks. Generally, you'd be inclined to take some profits on that. You're looking more at the gold sector now. Let's talk about gold. Well, what do you see there?
Well, the gold, it took a massive run, a 50% run in the gold price on the first indications of serious banking problems in the West. Then it consolidated at that level. The process we've been in since then, which is most of the last year, has been a combination of the gold in particularly Indian hands being used as a crisis hedge, i.e. being sold, as opposed to the flip side, which was more of a Western phenomena of new buyers coming in as an investment, just feeling it was a safer investment than other things that we're looking at. Those two have more or less held it in check, and we believe it's reached the point now where the gold price is going to have another lift. That lift will be essentially, as it often is, an inverse reaction to the US dollar price. We do expect that to continue. The US dollar, for a variety of reasons, should weaken, and as that happens, the gold price goes up. The selling in India as a fear-based hedge in order to create rupees to do day-to-day things with is pretty much gone, we believe. So it won't be in the way of price gains, therefore it's just a matter of the next impetus coming along.
Now, I know if you look at various gold share indices, different broad-based ones, certainly this spring, as I recall, the gold shares relative to the price of gold were extremely undervalued on most of these indices. Has that improved a little bit? And for instance, should people be buying gold instead of the gold shares? Or obviously that's a different thing to do that, but what's that relationship look like to you now?
Well, the relationship, obviously during the run-up ahead of the major crash, the place to be was in the metal. You had the 50% gain, and anything else that was liquid was being sold for a while. What's happened, to step back to the base metal space briefly, if you look at the big gains of 2-3 years ago in base metals, they came after the base metal companies had eaten down their debt so that it was their actual bottom lines that the market was reacting to. The gold companies, by and large, haven't had that opportunity. While there was a lift in the gold price, it wasn't to nearly the same degree. What's happened now, there's been a year of this higher price regime in the 900 roughly dollar range. That has allowed the gold companies finally to eat up some of their debt so that the market can come and buy their bottom lines. And we think with this quarter coming to an end in the next 2 or 3 quarters that the gold sector will be in that process, not completely regardless of the gold price obviously, but even if the gold price sits at its current level, the producers should be doing better because their bottom lines will be doing better for that reason.
Talking again, David Coffin, HRAadvisory.com. David, I want to switch gears a little bit here before we wrap up. One of the things I know you do personally is you travel the world. You're looking at properties all over the place, in different times, different countries or regions are in fashion. What do you like now?
Well, in terms of in fashion lately has been Colombia, and when you ask me that question, I think in terms of, okay, what has been problematic in the past that's now popular, because that's where your bargains are.
Right.
So Colombia is one. Another that we like a lot is Indonesia. It's a country that is in the midst of changing its mining law and also reorganizing itself in terms of its internal politics, and we think it's been overlooked for the wrong reasons, and it'll come back. There's a few places in Africa. West Africa is always, at a general statement level, a good place to be, but places like Ghana, which is a long-standing gold-producing area, but also Burkina Faso, next door to it. There's been a number of mines opening up, and it's a matter of watching each of the pieces of politics there. Zambia, on a base metals front, Zambia and actually the southern part of the Congo, which has the copper belt, is a special case where there's a lot of evidence and a lot of assumption that China's going to be in buying companies there. Therefore, companies working in that area have been doing a little bit better, the ones at the production level.
David, thanks for taking the time to visit with us today. David Coffin, HRAadvisory.com. Victor Adair, David Coffin, on behalf of HoweStreet.com. Thanks very much for watching.
Comments made on Howe Street Video and HoweStreet.com are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at HoweStreet.com. Howe Street Video is a production of Howe Street Media Incorporated.